All right, so let's just get started. One thing I do want to say is, as I'm beginning this video, I have a mechanical PDF system. Once you go into my Discord and you go to VIP education right here, okay, you're going to see a IFG setups rating guide in the IFG section or in the VIP education section, and you click this drive link, you're going to see a doc like this. Download it, use it. Okay, it's a very, very good doc. I made this a while ago, so like, when I made this, I definitely, you know, change a little bit, but for the most part, this is a very good starter guide for beginners. Okay, just remember, I'm not a beginner, so I, have my own discretionary stuff now at this point, but this is good for beginners. Okay. All right, so let's get started. So the number one thing you have to understand is, what is the main premise I look for in trades. Okay. The main premise I look for is us to go below some low. Okay, so like this, and usually this low will like really, really, really stand out. If it doesn't stand out, it's just like, okay, whatever. A lot of people teaching, a lot of mentors teaching this day, they'll draw these random ass lows, and I swear they're just, dude, they're just not obvious. Okay, and they draw these lows that just like are not like, here, I'll show you an example. So like they'll draw like, let me show you an example. They'll draw like this low. Like, dude, this low is just not obvious. It has to be, it really has to stand out. So like this stands out, okay? So I'm looking for a sweep below some sort of sell side or a sweep above some sort of buy side above. And the main idea of my strategy is to catch the reversal, okay, here, or catch a continuation setup here. So I'm either getting in here at this red or here at this red right here. Okay. So that is what I'm looking for. Now, what is the actual model to get in? Okay. Well, the actual model is going to be an inversion fair value gap. Okay. So I'm looking for some sort of bearish fair value gap right here. Okay. Which I'll show you the real chart time example in a second. I'm looking for some sort of bearish candlestick here, and I want this to be broken with a very high momentum candlestick to the upside, okay? And I want this candlestick to form a fair value gap here if possible. If not, then it doesn't matter, okay? I'm still taking it regardless. And usually I enter off the close of the fair value gap right here, and I'll target like the next high or whatever the next internal high is, okay? So like something like this, right? And that is literally the main premise of what I'm typically doing. Okay. Now, let me show you an actual example on the. All right. So if I go over here and I go to an example from today, I'm just going to show you like, this is actually a play that didn't play out that clean as I wanted, but it's like still the same idea. So we have this down here, and then we have this right here. Right? It's the same thing I was just talking about, how sometimes I'll take the reversal here, or sometimes I'll take the continuation here. Okay, and it's the same idea. Both are going to have some sort of inversion fair value gap. Stop loss is a close below, and then that's what I take. Okay. Now, in this situation, look, it's the same thing. Come down, see sells liquidity, go up, boom, 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 boom. Okay. Now, I'm going to go to the lower time frame and show you on the, I think it was the 30-second time frame. There was a 30-second, okay, right here. Okay, it was right here. Now, before you're like, oh, but Dodgy, closed back below, it stopped out. That's not the point of this video. The point of this video is to show you my entry model, okay, that has about a 70% win rate, 70-80% win rate, okay? So let's just go back in hindsight and look at what I'm looking at. So we sweep the sell side here, come down, and then boom. Really massive close above this 30-second inversion fair value gap. We have trend line liquidity above. We have an inversion fair value gap. So this is a type of entry I would maybe take, right? Where we do a stop below low, and then we target like another really obvious high, right? And now, could you put the stop at the low of day? Sure, you could, but you're sacrificing RR, and when there's really good price action, you're going to lose out on RR when we shouldn't come down here in the first place. Now, in this example, you can see that it would have technically stopped you out, but it's also 11:46 a.m. and the primary time of you want to use a strategy is between 8:30 o'clock or 8:30 to 11 o'clock. Okay. And again, like I said, the point of this video is to show you what I look for. Okay. Now we have another entry here where we have, fair value gap here, fair value gap here, and we close above both of them. But what I don't like about this setup is we didn't sweep. We didn't sweep that sell side. See, we came really close, but didn't sweep it. So I'd probably skip out on the setup, not take it, let price do its thing, let it come down to sell side, and then I look for long. Now, funny enough, if you play price, you could actually see this play would have worked out if you put your stop a little low, but it was very hard psychological hold. Okay, but this is the idea you have to understand, and this is why I'm showing you. It doesn't matter whether what I show you wins or lose right now, because this is a model you can, you can repeat if you look more into. So this is going to be, I'm going to show you a couple more examples. Okay, I would say right here. All right, see how there's a fair value gap right here. We go above, we sweep this very obvious high, and we get a very obvious like death candle back below it. Okay, now this is what I look for here. Okay, this would have been a loss, but there's more to it. Okay, I'm gonna go over this in the next video. I'm just showing you like examples of certain entries that you could have taken that just are like baseline good entries. Okay, we got this one right here. Right, we have a 30-second gap here. This works in any time frame. Right, we have, this one obviously works. It closes above. We deliver off this fair value gap, which if you watch my PDF guide, you know that we sweep this low and we hold this fair value gap and this in discount. So this would be an A+ setup. Let me just show you one more example. Okay. Okay, right here. Another example here, right? We have a 5-minute sweeps this low, right? You can see it works in any time frame, closes above here, okay. And then you can see we go for the next high. Okay, so this is a baseline of entry. So this is going to be video 1. In video 2, I'm going to explain it more in depth because there are stipulations to what I take here. But I just want to show you like a general summary of what I'm trying to do. Now, I just want to go back to that thing I talked about earlier. Remember how I said I take the reversal or I take the continuation? So right here. This continuation is actually going to be, let me show you, right here. See it? See how we already reverse here and then we get a pump up and then here's our retracement back down to a 50%. And then I would take the inversion off this, which would be your continuation IVG right there. Okay, so same idea, except this one's not going to always be at the low. This one's going to be like more of a delivery off of a lower time frame gap and then breaks another inversion or breaks another bearish gap that brought price down and tapped the 50%. Okay, so there's reversal type of entries, which I usually try to catch in like a lower time frame, and sometimes you get like these 5-minute or 3-minute or even 30-second. This works in any time frame. This works in any time frame. This works in any time frame. But like, let's say you miss this setup and you see us pump up and you're like, oh, I missed the move. Wait for something that's like a death candle back down that's going to make retail traders think we're going to reverse here, and then wait for the inversion back up. And just understand, like, you should probably know the draw on liquidity was up here in the first place. Okay, so this is a continuation model example. This is a reversal model example where it's right off of a super obvious low down here. That's going to be it for the video 1. I will see you guys in video 2.